Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out what companies are really up to. Today we are diving into a filing from AirT, and this one might leave you feeling a little airsick. It involves debt, amendments, and a whole lot of corporate shuffling, so let's try to make sense of it. The main event here is an amendment to AirT's credit agreement with Alaris Financial. Basically, they've tweaked their loan agreement and taken on some new debt. This happened on March 31, 2025. Several companies under the AirT umbrella, like Airco and Mountain Air Cargo, are involved as borrowers. So what's actually changing? Well, this is amendment number 3 to their existing credit agreement. Along with the amendment, they've also got a new $3 million overline note and an amended revolving credit note for 14 million Rs. The overline note is basically extra credit, a little more borrowing power. The aim here seems to be to cover seasonal borrowing needs, meaning they need extra cash during certain times of the year, and also to remove some companies from the loan obligations if they don't need to borrow anymore. Let's talk about the specifics of that $3 million overline loan. It matures or becomes due on October 31, 2025. The interest rate is a bit complex. It's either 5% or the CME 1-month term SOFR rate, whichever is higher. SOFR is just a benchmark interest rate used in financial markets, similar to what used to be called LIBOR. The loan is secured, meaning Alaris Financial has a claim on some of AirT's assets if they don't pay it back. Some of the companies originally involved in the loan are getting released from their obligations. These include Airco LLC, Airco Services LLC, and Stratus Aero Partners LLC. This suggests a bit of restructuring within AirT, maybe streamlining their finances. Now let's quickly glance at the exhibits, which are basically the legal documents related to all this. There's the $3 million overline note, the amendment to the credit agreement, and the amended revolving credit note. These documents spell out all the fine print. Now let's move to opinions and analysis of AirT. AirT seems to be navigating some short-term financial needs with this amendment and new loan. Taking on more debt isn't always ideal, but if it helps them manage seasonal cash flow and streamline their operations, it could be a smart move. The release of certain co-borrowers also suggests they're trying to clean up their balance sheet. However, it's worth keeping an eye on that interest rate, 5% or SOFR. Whichever is higher could become expensive if interest rates rise. And with the overline loan maturing in October, they'll need to have a plan to repay or refinance it. Overall, this filing paints a picture of a company that's actively managing its debt and adapting to its financial needs. It's not a cause for immediate alarm, but investors should definitely keep an eye on how AirT handles its debt obligations in the coming months. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more Corporate Decoder videos. Let me know in the comments what company filing you want me to break down next.